Hello and welcome back to another episode of Pizza and Property. This is your weekly sliced edition. My name's Todd Sloan, and today we've got an episode for you that could potentially save you a truckload of cash and as far as refinancing is concerned. Because if you notice sometimes that there can be a cheaper rate out there, but because of the assessment rate being whatever it is, like 3% extra, technically they look at you and go, you can't even afford what you got, let alone afford like to refinance, even though realistically you probably could. Well, there's a few lenders out there that have made a change that could make a huge difference to your hip pocket, changing that assessment rate from 3% to 1%. And to talk us through the details, we've got John Kefalianos from Finance Lab, both a mortgage broker and developer, someone that understands this stuff back to front, to walk us through what does this actually mean dollars and cents wise. But just before we get into it, a very quick sponsorship message. If you want an accountant that has the in-depth knowledge of the tax system and portfolio creation that actually practices what they preach, the accountants at KHI Partners are a dedicated team of property investors that have helped over 16,000 of their clients successfully grow their portfolios whilst getting the best return for their strategy. That's an important part. So if you're looking for an accountancy firm that has the knowledge and property expertise to help you with your property investing goal, get in touch with KHI Partners today. Click the link in the show notes below or just Google KHI. But right now, let's get into the episode with John Kefalianos to talk about how this assessment rate change could potentially save you big time. John Kef, how are you, mate?
Good, Todd. How are you, mate? How you been?
Mate, very good. It's good to have you back in the studio. Why not back in the studio? Just in the studio
In
now.
the studio. Awesome studio.
Yeah, man. First time.
Thanks for having me.
The absolute pleasure is all mine. But there's some very exciting stuff going on in the finance world that I wanted to open up with you. But I also wanted you to open up with us. So if you don't mind being a slice, can I just jump straight into the questions, mate?
Sure.
Fantastic. Look, as far as the assessment rate buffer is concerned, it's changed. It's changed a little while ago. It doesn't feel like people are really talking about it much, which is one of the reasons I wanted to really give this a big push. But can you give us first an overview on what actually is it? What's changed?
So what's actually changed is the assessment rate that banks apply for refinancing.
Yep.
There's a bit of criteria that goes behind this. But in summary, when you go to the bank to refinance your home loan, you need to show the bank that you can service 3% above the actual rate.
Okay.
So if the actual rate is 6%, you need to show the bank that you can service your loan at 9%.
Yep.
So what's actually changed is that buffer rate has reduced to 1%, meaning that you now need to show the bank that you have to service your loan at 7%, which is 1% above the actual rate of 6%.
That's a massive difference.
Which is a huge difference, and helping out a lot of people who are stuck in a mortgage prison where they're with one bank, paying a higher rate, and they can't refinance.
So they actually could get something cheaper elsewhere,
Correct.
but like technically on paper, they're like, sorry, you can't afford it. But when really they actually would be better off.
Correct. Yeah.
Right.
And what's been happening is banks seem to be offering better deals to new clients rather than their existing clients. So there's an opportunity for people who are paying a higher rate with their current bank to try to save some money and restructure their loans to help their cash flow.
Yeah, I haven't got one of these magical cashback things yet. Everyone seems to be getting 4 or 5 grand from their banks at the moment.
They are all coming back now. So I think bankers say are still offering theirs until the end of August.
Yep.
But most banks are starting to pull back their
Yeah,
It's
okay.
not as strong as what it used to be.
Okay, well, on the assessment buffer change, can we sort of go into a little bit of a scenario or deep dive more into an explanation of how is this actually going to affect an investor?
Sure. So I've ran some figures on an investor, couple with one child earning $120,000 a year each.
Okay.
I've then looked at their scenario and just assumed they had 3 investment properties, loans of $500,000, and also assumed rent of $500 per week on each investment property.
Okay, so 3 investment properties, and they got a PPR as well?
Home loan of about $500,000.
So home loan of $500K for themselves. Yep, okay.
So in summary, 4 loans, $500,000 home loan, 3 investment loans at $500,000.
Yep.
And rental of $500 per week per investment property. So basic scenario, just to run some quick calculations on how this buffer rate will affect someone's borrowing capacity.
Okay.
Prior to the change, they could not afford to service their loans to refinance and restructure. So with that 3% buffer, under that scenario, they couldn't refinance, restructure, try to get a better deal anywhere. With the change in the buffer rate, so when that buffer rate changes to 1%, they can now service with several banks, allowing them to be able to refinance and restructure their loans. What that could mean, let's just say they've had their loan for 5 years.
Yeah.
They were interest only. They're now at principal and interest. They can restructure their loan, or their investment loans more importantly, back to 30 years P&I, which would reduce their repayments. Not only would they save on an interest rate, but also save on their repayments of their cash flow.
And they'd actually be knocking away their principal.
And still paying off their loan. Unfortunately, under this product, you can't go interest only though. So
And this is sorry to quickly jump over there, John, but this is one of the reasons I think it's so important for everyone to know, because everyone's looking at how do I increase cash flow by, like, am I renovating, am I developing, am I doing something to the property? But increasing cash flow isn't always about what you can actually do to a property or invest into a property. Sometimes it's actually about the way that you can refinance, which now it's opened the door. And
speaking to real estate agents, there is a few people reconsidering selling their investment property because of their cash flow. So rather than selling their property, they can restructure and help their cash flow to allow them to keep their property, which I think is very important, because property prices aren't going down. They are going up. If with the talk of rates stabilising, there is a chance that property prices may continue to increase as well.
Yeah, I mean, I guess it depends on where you are in the country, but I mean, realistically, things are looking pretty positive now as far as what they were 6 months ago in comparison. I mean, maybe not for Perth and Adelaide. We've been looking pretty good, both of us, there for a little while now, but I know Sydney and Melbourne's starting to take that little bit of a positive turn. But as far as the changes here, who's actually making the changes? Is this just the sweeping change? Or
no, there's only a few banks. So we've got Bank SA Westpac.
Yep.
We have Commonwealth Bank.
Okay.
We have NAB, and I believe Pepper as well have just announced a change as well.
And Pepper?
Yeah, so they're another one which have announced that buffer change to 1% as well. There may be a few others that are about to change soon, because once one bank starts, they all start following.
It's the domino effect.
It is definitely a positive change in the market to get people out of that mortgage prison where they're paying a higher rate with their current bank, couldn't refinance, they couldn't service, whereas now they can.
Yep.
And take advantage of going to a new bank where they can get a better rate, lower rate, restructure their repayments over 30 years and reduce their repayments and improve their cash flow.
All right, just lastly, John, is there any downsides to this? Because it's all sounding pretty good.
There are some credit criteria you need to meet.
Okay.
Number one, your repayment history has to be good for the last 12 months.
Got it.
Your credit file has to be good, and it's not available for interest only. So it's only available for principal and interest.
Okay, and is also personal names as well? Is that?
And only available in personal names at the moment, not company or trusts.
Okay, but I guess that's a bit of a watch this space because that could potentially change. Well, like fingers crossed for a lot of people, I'm guessing.
Correct, yep.
Okay, excellent. Well, John Kefalianos from Finance Lab, thank you so much for jumping on the show, mate. This is probably going to help a lot of people.
Thank you, Todd. I hope it will. I'm sure it will.
Realistically, this is a change that has happened, I think it was like 6-8 weeks. This isn't like this happened yesterday. The reason I wanted to make a slice on this is because it feels like no one's talking about it. It feels like unless we're all kicking the boots into Philip Lowe or just complaining about stuff, like, and when I say we, like the mainstream media, the general narrative isn't really spoken about. This is a narrative that genuinely can help so many people. So if you've got a friend, whether they're a property investor or not, send them this episode, because this could be the difference between them potentially hanging on to their investment property, potentially hanging on to their own home. And as we always say, this is not financial advice. Please seek independent professional financial advice, but take this kind of stuff to them. Like the worst case scenario is you sit down with either your bank or your broker or whoever, and they go, oh, sorry, actually this isn't gonna work. The best case scenario, they go, actually, yeah, we can do this, and this is now gonna save you several $100s a month, or it's going to allow you to actually borrow more. Like, do you know what I mean? There's no downside. But if you're still feeling stuck, make sure to click the link in the show notes below and enter our Unstuck Yourself competition. Our first winner is going to be drawn, actually, I think it's like next week, to be flown right here into the studio. And make sure, put a little bit of detail in why you're feeling you're stuck. I've noticed some entries are coming in. We've got a ton of entries already. Some are just like finance. It's like, okay, like it's a little hard to understand your situation there, but some people are like writing a couple of paragraphs. It's not War and Peace, but it gives us enough to go, okay, cool. Like we can understand this person's situation better, which is going to help us be able to go, who's the best team to assemble to unstuck them? So click the link in the show notes below to enter. And even if you don't win it this time, we're running this for at least 6 months. So keep an eye on it. But if you want to sidestep all of that and you just want to go straight to a BA and get someone to actually take care of this for you, then you want a buyer's agent that's built their own portfolio and supports us here at Pizza and Property and actually makes the show possible. Have a chat with Rishi Bajaj, because if you do want a buyer's agent that's actually built their own portfolio and knows the tricks of the trade to do the same for others, Rishi Bajaj could be your man. He's built over a $9 million property portfolio over the past 15 years and is now using his skill sets and expertise to help others build theirs. And when I say others, I mean like people like you. So if you're looking for property wisdom and experience in your corner, someone that's got the runs on the board and the skill set to match the growth you're looking for, give Rishi Bajaj a call today, or just click the link in the show notes below. It will be way easier. But otherwise, guys, that's enough from me. My name's Todd Sloan. This is the Pizza and Property Podcast. And as always, have yourself an amazing rest of the week and stay awesome.